Flowr Corporation is a licensed producer of cannabis with a head office in Toronto and a production facility in Kelowna, BC. Flowr is expanding globally in Portugal and Australia and has signed a distribution partnership with Shoppers Drug Mart. The company recently broke ground on a 50,000 square foot R&D facility in partnership with Scott's Hawthorne. The company has a net cash of $572.64 million, with management and insider ownership at just under 75%. Flowr Corporation listed on the TSX Venture at $2.60 per share on September 26, 2018 under the symbol FLWR.
Joining me today is Flowr Corporation CEO Vinay Tolia. Welcome to the program.
Thank you so much for having me, Ben.
Okay, so getting right into your recent earnings report, you sold 406 grams of premium cannabis, and you did that despite only having about 20% of your main facility up and running. Can you explain to viewers why this was an accomplishment, and what did this signify to the market that you're able to have this strong revenue profile with such limited utility outlay?
Absolutely. So we have been saying for the last couple years just how hard this product is to grow. That's one of the things that makes us different, is we're talking about all the steps that are necessary in order to sell cannabis at any quality, but let alone premium quality cannabis. It's incredibly hard and it's often overlooked. The fact that we were able to put up these numbers on a partially built facility just speaks volumes to our team and our know-how.
Okay, so should investors extrapolate that if you're producing gross revenues of $3.3 million on about a fifth of that facility? I'm not sure if all of that is the growing portion of it, but should those revenues extrapolate to at least 5 times in the next, say quarter or two, or with the extra production capacity, will it go higher than that?
It'll go much higher than that. We're still scaling up as far as getting optimizing our yields. So, as you mentioned, we had 20% of our grow rooms operational in Q4. We'll have 100% operational in Q3 this year. And when we're fully operational from that first facility, it'll be a minimum of 10,000 kilos annually of premium cannabis.
Okay, and is this cannabis, do you have organic certification? You don't right now, but are you pursuing organic certification? And if not, why is that not problematic for your company? Do you see that as as an operational advantage or not?
So that's more of a marketing issue. In our minds, what we're trying to do is grow the best and cleanest cannabis. While it may not fall under the organic certification, I find that somewhat misleading, because what we're trying to do is grow plants that have full terpene profiles and that are clean enough to not require a remediation step, a kill step, such as irradiation. Now, the organic process can require irradiation, which affects the terpenes, which affects the taste and flavor of the plant. Our goal is to sell non-irradiated cannabis. So that to us is more important than that certification.
Okay, was that a big selling point to get into Shoppers Drug Mart? That announcement came out March 18th that you were going to be part of their product portfolio. Was that a big selling point that your product doesn't need irradiation? And furthermore, will that product be subject to medical subsidies in terms of patients being able to claim it against their insurance?
Absolutely. So I want to make a distinction that I don't view quality as just irradiated or non-irradiated. It is a handful of things. So for me personally, quality is consistency. How consistently can you grow the same strain so that it has a similar genetic profile? And so, especially when you're talking about patients, these are people treating symptoms. They want the same efficacy time and time again. There's consistency. There's the nurturing of the genetics. There's a lot of what I call TLC, for lack of a better word, how you monitor the environmental conditions, when you add nutrients, when you water, how you trim. That really is about cultivating what I mentioned, the terpene profile of the plant. That's another part. And then there's the cleanliness. Can you have a facility and processes that allow you to grow a plant that's so clean, when it's time for harvest, it can pass Health Canada testing for microbial limits without a kill step. So that's what quality is for me, and that's what's so that was what was so valuable for Shoppers. Remember, Shoppers is, they're pharmacists. What they care about is supplying their patients with quality product. So not only does quality product result in a better aesthetic experience, so it smells better, tastes better, but there are so many of these flavonoids, cannabinoids, terpenes that are misunderstood that have medical benefits. So while this isn't researched, higher quality product leads to better outcomes for patients. That's why Shoppers is so intent on serving their patients with the highest quality product. That's why they approached us. That's why they're such phenomenal partners. And to your point about insurance, yes, absolutely. All the patients who go through Shoppers are eligible for any eligible write-offs on their taxes, as well as, I believe it was Great West a month ago said that they will start reimbursing their customers for specific conditions, but only if they buy through Shoppers. So I think that's something to look forward going out as additional insurance companies having a similar program.
Yeah, Manulife has a big program as well with multiple symptoms. Now pivoting towards your European Union growth strategy, it's my understanding that you are trying to construct an EU GMP certified facility in the EU. Can you explain what your strategy is for the European distribution and production going forward?
Absolutely. So we view the EU as an incredibly exciting and important market. Again, a different market than here in Canada. It's clearly much more or completely medicinally focused. So we partnered up and acquired 19.8% of a company called Holigen. They have assets in Australia as well as Portugal. And the one in Portugal is very unique. It is the largest cultivation asset potentially in the world. It's a large outdoor grow. They are they have a quota that can exceed 500,000 or 500,000 kilos a year from this one site. So the idea is to get that, build it, get it up and running, and to supply the entire EU with medicinal product from there.
Okay, I think there may be a misconception, or not, as it were. I want to get your opinion on it, that outdoor grow is more for perhaps edibles or more for maybe the low-end recreational market. Do you think that outdoor grows actually can be suitable for the medical market in terms of quality production, even though it is outdoor and perhaps the environment is a little less controlled?
So this product would be headed for extraction and then for the medicinal market. I completely agree with you that outdoor and even greenhouse, for that matter, isn't competing with our premium indoor or anyone's premium indoor flower. These are totally separate markets. So we view the market as bifurcating. I think in the future there will be the premium indoor flower, and then the rest will be biomass. That will be product for extraction. And you mentioned edibles and gummies. All that product is going to come from outdoor in greenhouse. So that'll be really a race to the bottom as far as who can produce more efficiently. Yeah. So I completely agree with you but if you can extract it and put it into an oil, then you can use it for the medicinal market. But that's not the premium flower for patients like we have here in Canada.
Okay. Now, lastly, the second quarter has just begun, fiscal second quarter of 2019. Can you give investors sort of a rough blueprint, as much as you can, about what catalysts lie ahead for Flowr Corp and what investors should expect, how much you should move the ball forward, say, by the end of the year?
Sure. So we have a lot of exciting expansion plans. So we have, as I mentioned, our first facility, Kelowna 1, that will be fully operational in Q3. We broke ground last October in our R&D facility, which is a partnership with Scott's Miracle Grow, Scott's Hawthorne. That will be done in Q3 as well. These are all on our Kelowna campus. We have plans for a larger grow facility called Kelowna 2. That'll be 4 times the size of our original Kelowna 1 facility. That we're hoping to break ground on mid-year this year. And then we have our NASDAQ listing, which we're still waiting for approval from NASDAQ, but that seems to be on schedule as well.
Any timelines on that specifically, or
no specific time? We can't comment on specific timelines. We're just waiting for final regulatory approval. But we have no reason to believe that there's anything amiss there. But as far as catalysts, so we have our first Kelowna building, second Kelowna building, R&D facility, as well as we will be building a greenhouse and outdoor grow on some agriculture land, approximately 40 acres of ag land across the street from our Kelowna 1 facility. And we're hoping to plant mid-year for that. And to your point, all that product will be headed for the extract markets later this year.
Hey, terrific. Well, a great update. Thanks a lot for joining us again on the program, Mr. Tolia, and we'll look forward to following your story going forward.
Thank you so much.